Hey guys, it's Jeff Trapp here with the Jeff Trapp Podcast, and I am so glad that you've decided to join me today. Well, it's we're back in full swing with school, and if you didn't listen to our back to school podcast last week, I think you'll find it really, really interesting on the things that you can deduct for those kiddos. But today, I want to talk to you about something that's really, really important for you and your business. And if you're a business owner, you might be receiving a lot of phone calls, a lot of letters in the mail regarding something called the Employee Retention Credit. Now, one of the things I want to talk about today is, well, hey, does your business qualify? What constitutes your business qualifying for this Employee Retention Credit? I'm also going to give a few disclaimers and things at the end of today's podcast of, when it's appropriate to take this a credit versus when maybe it's not appropriate to take this credit, and what you need to be aware of when it comes to auditing on this credit, right? So it's a big deal. So the Employee Retention Credit, you can still claim this credit if you employed employees during the COVID-19 pandemic. So you can still go back and amend payroll tax returns, amend tax returns for 2020 and 2021. You have that opportunity up until April 15th, 2024. So we've got about 8 months or so left for you to still claim this credit. Now, you may be wondering, well, Jeff, do I qualify? I had some employees, or maybe you were a single owner company, right? And so you want to see if you actually qualify for this credit. And in 2020, the credit is up to $5,000 per employee. So if you had, 10 employees, it could be very, very fruitful, right? So what do we want to look at here? So in 2020, if you had a decline in gross receipts, and those quarterly gross receipts are less than 50% of your gross receipts for the same calendar quarter in 2019, and your gross receipts in the 2020 quarter that follows the 2020 quarter described above are less than 80% of your gross receipts for the same calendar quarter in 2019. Oh my gosh, what the heck does that mean? So, example one, let's say your 2020 quarter two gross receipts are 43% of your 2019 quarter two gross receipts. Your wages paid during quarter two qualify for the Employee Retention Credit. Now, let's do another example here for 2020. Your 2020 quarter three gross receipts are 73% of your 2019 quarter three gross receipts. Under the look back rule, where quarter two receipts were less than 50%, your quarter three wages qualify for the Employee Retention Credit. Now, that might sound like Greek to you, and I would highly encourage you that you consult a strategist who specializes in the Employee Retention Credit to see if you actually qualify. Now, for 2021, the credit is even larger. So the 2021 Employee Retention Credit is available for quarters 1, 2, 3, and 4, and it's $7,000 per eligible employee per quarter. So that's huge. So in 2020, it was $5,000 per employee per eligible quarter. So it's a lot of money that's out there, right? So what does that mean to qualify under the gross receipts test? Your 2021 calendar quarter gross receipts with the same quarter of 2019. So you compare 2021 and 2019. If the 2021 gross receipts are less than 80% of the 2019 gross receipts for the same quarter, you qualify for that quarter. So it can be very, very confusing. You want to make sure that you have up-to-date financial records, that your accounting records are impeccable so that they can be reviewed to determine whether or not you qualify. Now, maybe you don't qualify under the gross receipts test for 2020 and 2021. That's okay. If the government ordered a shutdown for your business, you are not one of those businesses that were required to remain open, right? You weren't considered a business that needed to be open, and you had gross receipts, a drop off in gross receipts, you may qualify for the Employee Retention Credit for that specific time period. So, if you owned a restaurant, let's say, right? And you were shut down for maybe a month before you could reopen, um, the wages for that month-long period may qualify for the employee retention credit. Now, if you had a issue with a supply chain disruption, or you were unable to provide certain goods or services um, because your workspace wasn't built out to accommodate employees for the COVID-19 pandemic, you may qualify for the employee retention credit. So I know that's a ton to unpack here, and there's a number of different ways to qualify. First off, as kind of a disclaimer, I would encourage you to speak with a strategist, your accountant, uh, about the employee retention credit to review your financial records to see if you actually qualify for that. There's a lot of companies out there that are calling you right now, sending you letters, and you want to make sure when you are applying for this credit that you utilize a reputable company, because the IRS did issue some guidance earlier this year where they said they're going to audit 100% of the employee retention credit claims. We're actually seeing people who did not actually qualify for the claims under these rules. Now they're paying fines, penalties, interest, having to pay money back. Even some practitioners who are helping their clients get these credits, they are actually being sent off to jail because they said everybody qualifies. Well, that is not the case here. So you want to make sure you find a reputable company, a company that's going to be in business when you do get audited, so that you can show them the proper documentation and the records. So it's super important. A lot of businesses qualify. If you're a sole owner business, unfortunately, you do not qualify for the employee retention credit. So that's you, your spouse, your kids, so related parties. You do not qualify for the employee retention credit. And if you got the credit under these false pretenses, I would highly encourage you to return that money. It's very similar to the payroll protection program, where some businesses actually did not qualify for that and they needed to repay that money. But the IRS said this is going to be 100% audited. Now, if you qualify, go ahead and take that credit. You're entitled to that. The government put that program together for you. But if you want to weigh the cost benefit analysis, right? Like, what's the cost to amend the payroll taxes? What's the cost to amend the tax returns? And is the credit worth it? And am I getting enough of a credit where I can actually withstand an IRS audit? And my books and my records, are they impeccable where they can't dive into some other things? Because I think this would be a great way for the government to generate some revenue. Remember those 87,000 IRS agents the IRS wants to hire? Part of that hiring is going to be tasked with enforcing the employee retention credit and making sure that you qualify. So I know that was a lot to unpack there, but there's a lot of money out there that I want you guys to know about. And if you qualify, I want to make sure that you get it. So if you like this episode, please like, share, subscribe it, share it with a business owner that may qualify. And, make sure that you sit down with a tax strategist, your accountant, someone who understands these laws to make sure that you qualify. It's super, super important. I can't wait till we chat again next week, and we'll chat soon. Thanks again. I'm Jeff Trapp with the Jeff Trapp Podcast. Have a wonderful day.